So the question is, what should be the next generation payment systems which should address it? And what is the sort of ecosystem that needs to be created in order to enable this possibility of both financial inclusion and removal of cash from the system or reduction of cash from the system? As far as enablement of financial inclusion is concerned, is jointly delivered. And last but not least, comment upon what we see as the enabling regulations, whether it is from the perspective of the financial regulator or the telecom regulator. What I would request to run this session, considering the paucity of time, I would request each panel member to make their comments in the next 2 to 3 minutes each, and then we can have a panel discussion around this topic and throw the session open for questions. So if we can start from right to left.
Thank you. Banks and non-banks, I think the key point that I'd like to put across is that whatever we said, ultimately we're a part of an ecosystem that has to work together. And today, surely the ecosystem is not delivering as much value in terms of growth of all the parties involved as it would have liked to be or it is projected to be. And there's a reason for that, and that is the delivery of value. Today, if I'm a bank who wants to grow, I've invested heavily in infrastructure and putting in processes in place, and I'm a banker and I have to do banking. That's my core competency. But to draw value, I have to reach out to customers and produce services and goods that are of interest to them through my payment systems, and that encourage them to come and use my payment systems. As a bank, there's a limit to the kind of development that I can do in terms of building a business model which can reach out to customers and be of relevance to them. If I put out a product which is of interest to the customer, suddenly I realize that I have to do customer support, I have to do the redevelopment of technology. The technology keeps changing, and there are a lot of things that I'm getting into, and then I'll say, I'd rather stick to my knitting and not, go out too far out. And this is where the non-bank guys comes in. They're the guys who are, literally live by the wits. They're the guys who are actually involved in developing technology and new ideas based on market needs. And they plug in a gap where the banks can't go into. That's the way I see it. And how do banks make money? They make money by moving money. And if a non-bank comes in and provides a service which helps move that money and help the bank earn an income in that movement of funds, then we are not really non-banks. We are what I call as 3Ms, money-moving machines for the banks. And as a money-moving machine, I have to keep acquiring merchants and customers for the bank and use the bank's infrastructure to make sure that the payment goes through properly and completely and clearly. At a macro level, I agree with the points that has been raised here. I'd like to bring it down to a small micro level and put it at a real life situation. Let's say there's a hotel group, for example, which is having a relationship with Bank X, and there's a fairly nice, decent relationship that has been going on for a while. Money in, money out, everything is hunky-dory. Bank Y, who's pretty aggressive and says, hey, I want to grow my business, and here's an opportunity in the hotel group which I'd like to get into. But he comes across to the bank, to the hotel group with the same, slew of products that the other bank is offering. There isn't much of a chance for the new hotel group to move the account into the new bank. So how does the bank swing the business? If there is, let's say, a tie-up with a non-bank partner like us, let's say a product that we have called CCAvenue, and it says, look, here's my friend called CCAvenue who's going to offer you an online booking engine along with a payment gateway. All I ask for you is that, look, let all the funds come into my bank account after the transaction happens, and I'll get those guys to give a discount to plug in. So the hotel group probably gets interested and it says, oh, there's value in this proposition, so let me consider this. So bank has swung the relationship along its way, and there is a transactions that are happening through the website of the hotel, and the hotel is gaining new revenue. Next thing the bank says is, hey, look, I got millions of customers who've got debit cards and credit cards and net banking customers. Now, why don't you give me special offers for these customers? Let me go across and provide these customers with special offers from this hotel group. And there are a lot of customers who are there today who looks at net banking and says, hey, listen, I just want to log in, look at my account and do the basic requirements and just walk out. Now, if you're telling me that I can actually have an additional functionality of booking a hotel room in a partner hotel and get a discount in the process, hey, suddenly I'm interested. And suddenly that bank account goes beyond being just a a vanilla product that I get into something that is giving me special value. Suddenly, it's win-win for everybody. The hotel is happy because it's got additional new customers. The bank is happy because every time the transaction happens on the hotel website, the money gets transferred from the customer's account within the bank to the hotel's account within the bank. And for that internal transfer of funds, there's a percentage income accruing to the bank for every transaction. So money moving internally has generated value for the hotel, generated value for the bank, and the customer is happy because he's got value adds which normally he would not have gone. Suddenly he tells all his friends, hey, look, this is what is happening. And I had a slide actually of ICICI Bank, which is actually giving discounts on net banking transactions for customers who are, transacting using the net banking accounts. If there is value adds given to the customers will definitely want to adopt this. Now in this entire process, what has kickstarted is a whole new revenue stream for everybody in the process. And the question about who owns the customer, I think ultimately it's irrelevant because finally there is a value being delivered by every party in the ecosystem. And as long as that party is delivering a value, hey, it's a competitive market out there. If you don't deliver value, you're out. So as long as each party is delivering value to every element in the ecosystem, everything should run smoothly and nicely. So take this model across to multiple opportunity areas across this country, across this industry. Let it be events, let it be bills, let it be mobile payments. I'd love to see the day when, I have to thank Naveen for this definition, the ABCD in this urban sectors. The IRs, the buys, the drivers and the cabbies and the drivers. These are the guys who are actually earning 5,000 to 20,000 rupees a month. They probably don't have a bank account. Very few of them probably have a bank account. Now, if there's a product delivery wherein, through the mobile, a driver calls up his kirana wala and say, boss, tumhare mobile pe paisa bhej diya hai, ghar mein kirana bhej dena mera. Okay, this is a wonderful situation to be in. There are opportunities there. It requires products and services which are unique and relevant to the end customer for it to work. So the ecosystem has to recognize each element's importance and give it due respect. When it comes to compensation sharing, I think the key role that a 3M company or the money moving machines as I call it company plays is to innovate and create new ideas. Right? If there is not enough money coming into the 3M company, then its spirit of innovation and service delivery will suffer. Everybody is going to suffer. So an equal understanding of the role that each people play is very, very critical for the ecosystem to work. Thank you.
Thank you very much. I think very interesting comments.